If we can create a new bullish leg above $1.29 on XRP, I'm going to start saying that the bottom is in.
There's a little bit of a bull market, we'll all forget what we just said today and everything is going up. So that's the nature of the cycles in crypto, fortunately or unfortunately. But there are deep issues around macro factors that go against alts and crypto right now. So, until the war in Iran, the interest rates and inflation is not totally solved, we won't see a big pickup or a big move in crypto. If you see how crypto performed against QQQ in the past 2 years, we're underperforming. AI obviously has been a very big narrative and a lot of the liquidity went out there. So until all that normalizes, the altcoin market is not going to succeed.
So the question is, starting off this week, are we starting to see some of those outliers turn in favor of risk on sentiment? What is going on, everybody? Welcome back to another CYPRX video breakdown. That was an individual representative from ARK Capital going on to talk about the fundamental backdrop in the digital asset landscape, some fundamentals that could act or could not act as tailwinds for the digital asset ecosystem, propelling altcoins higher. In today's video breakdown, we're going to dive into the fundamental backdrop, preparing you all for the week ahead, as we do have CPI, PPI, and retail sales this week, which are going to be major outliers for how the digital asset ecosystem reacts in terms of, do we continue last week's supportive environment where the total cryptocurrency market cap hovered from around $2.1 trillion at last week's low and made it all the way up and breached last week's high as of time of recording, hovering at around $2.2 trillion. Does this uptrend, does this small recovery continue, propelling us into higher levels? We're going to touch on all that today. You guys are going to be very well aware of the fundamental backdrop, what to be mindful of in the coming days ahead. After the fundamental coverage, we are also going to go over Solana, XRP, and CANTON's price, covering updated dark pools and deltas to be mindful of in a risk on and risk off environment this week ahead. So make sure that you stick around for that as well. So if you guys enjoyed today's video breakdown, do us that favor, smash that thumbs up button, subscribe to the platform. I know that this is the boring stuff that nobody wants to pay attention to, but this is the stuff that matters. So we're going to read thoroughly through our August 9th fundamental report. I hand type these out for the private community members inside of our CYPRX Discord every single day, keeping the members aligned with what to be mindful of either that day or that week in terms of fundamentals and price action. So if you guys want access to these daily reports, which we deliver inside the private CYPRX Discord, they get sent these every single morning, the fundamental update section. You guys also get access to Mr. Man's AI that goes in and reads all of these fundamentals for you all, Atlas Intelligence. And these briefings are so phenomenal and so helpful to keep you guys aligned with the current market sentiment. These recordings are so clutch. These fundamental reports are so aligned with keeping investors in the loop with what's happening in the moment, instead of this false narrative of price predictions and bullish sentiment and all this stuff. It keeps you focused with what's happening in the now. So let's read thoroughly through this so that way everybody, all the followers here at CYPRX, understand the environment. Weekly fundamental outlook. We have inflation, Fed expectations in the Middle East. Stay in focused. First, going back into last week, the total cryptocurrency market managed to recover a large portion of its losses, starting the week near $2.1 trillion and finishing back above the $2.2 trillion threshold. The recovery was driven primarily by two major developments: a sharp reduction in the Federal Reserve rate hike expectations after a much weaker than expected U.S. labor report. And we had renewed hopes that diplomacy could eventually reduce tensions in the Middle East. The July jobs report materially changed the conversation around monetary policy. The U.S. economy unexpectedly lost 23,000 jobs compared with expectations for roughly around 80,000 new jobs. May and June payrolls were also revised lower by a combined 103,000 jobs, confirming that the labor market had been weaker than the real-time data originally suggested. The unemployment rate fell to 4.1%, but that decline came largely because people left the labor force, with participation falling to its lowest level since 2021. In other words, the lower unemployment rate did not necessarily reflect stronger hiring. The markets reacted exactly as you would expect to softer labor conditions. Treasury yields moved lower, the U.S. dollar weakened, equities pushed higher, and rate hike expectations were reduced. Pricing for a September rate hike increase fell substantially after the report. That helped support risk assets because investors began to believe that the Federal Reserve may have less of a reason to tighten monetary policy aggressively if labor conditions can continue deteriorating. The attention shifts from last week's unemployment towards inflation and retail sales data. July's CPI and PPI will be the most important scheduled data this week because they will help determine whether last week's dovish reaction can continue. Headline CPI is expected to rise 0.1% month over month, while core CPI is expected to increase 0.2% on an annual basis. Headline inflation is expected to slow towards 3.4%, with core CPI easing towards 2.5%. PPI is also expected to show only modest monthly increases. If these numbers instead confirm that inflation is cooling, markets could begin pushing rate hike expectations even lower. That is the ideal scenario for risk assets heading into the new week. Weakening labor data combined with softer inflation would make it increasingly difficult for the Fed to justify another rate hike this year. Treasury yields could move lower, the dollar could weaken further, and both equities and crypto would likely benefit from the improved liquidity backdrop. If inflation surprises to the downside, the market may even begin discussing the possibility that the Fed remains on hold for the rest of the year, which would be substantially better than what we've currently seen priced in, which is rate hikes. However, of course, the opposite scenario still matters. If CPI or PPI come in hotter than expected, particularly if energy-related inflation starts filtering into broader prices, the market could quickly reprice another Fed hike back into September or later this year. That would likely push Treasury yields higher, support the dollar, and place renewed selling pressure on risk assets. Because the markets rallied last week largely on lower rate hike expectations, any inflation surprises that reverse that narrative could trigger meaningful volatility. Retail sales will also matter because they provide another read on the strength of consumer spending. Spending is expected to increase modestly. A moderate report would probably be constructive. Extremely strong consumption could reinforce the idea that demand remains way too resilient, while an unexpectedly weak report could raise concerns that the economy is slowing too quickly. Investors will also monitor consumer sentiment, small business optimism, housing data, business inventories, and scattered Federal Reserve speakers throughout the week. So, again, if you all need to be aligned with daily fundamental updated reports to keep you guys active in the space as to what's happening in the moment, head over to CYPRXtrading.com. We'd love to have you guys on the team as we align our members with these reports daily, and we host Zoom calls breaking down the fundamental backdrop every single morning during New York session in our private community. On the Middle East front and the yen carry trade unwinding still remaining the biggest unscheduled risk events in coming days ahead. Tensions surrounding the Strait of Hormuz remain unresolved, and the U.S. naval blockade of Iran continues. Iran is still holding discussions with Oman regarding the shipping through the strait, but Tehran has made it clear that those technical discussions do not automatically mean the waterway is reopening. Iranian Foreign Minister Abbas A. also stated that there are currently no direct negotiations between Iran and the United States, although intermediaries continue trying to restart talks. Iran has laid out a demanding list of conditions before it would agree to fully reopen the strait. Tehran wants the United States to end the naval blockade, compensate Iran for damages caused during the war, unfreeze Iranian assets, remove sanctions, and permanently end military action against Iran and its regional allies. These demands create a difficult negotiating environment because Washington has previously resisted several of those same conditions. At the same time, the United States continues insisting that commercial shipping must be able to move safely through the strait and that Iran cannot threaten vessels with missiles or mines. Vice President J.D. Vance has described ongoing discussions around a traffic system that could include demining operations and assurances from Iran that ships would not be attacked. Oman has continued saying that its talks with Iran are progressing in a constructive manner, but recent attacks on commercial vessels show how fragile the situation still remains. This means Middle East developments will continue having a direct impact on oil prices, inflation expectations, and central bank policy. A constructive response from the United States to Iran's demands this week, or any agreement that meaningfully reopens the Strait of Hormuz, would likely be bullish for risk assets. Oil prices could decline, inflation expectations could ease further, treasury yields could also fall, and the probability of another Fed hike would likely continue moving lower. That combination would provide a much more supportive environment for both equities and crypto. As you heard the lady from ARK Capital say, that until we see the Middle East tensions behind us, we're probably not going to see a substantiating bull run in crypto. But if we did, that would be a tailwind for risk assets. And the final risk that we cannot ignore in the coming weeks ahead as the yen carry trade unwind. We have discussed how global investors have spent years borrowing cheaply in Japanese yen and using that capital to buy higher yielding assets such as US equities, bonds, and crypto. That trade works as long as Japanese rates stay low and the yen remains weak. The problem comes when the Bank of Japan tightens monetary policy. Japanese authorities intervene to strengthen the yen, or USD JPY falls sharply. In that environment, the funding side of the trade becomes more expensive and leveraged investors can be forced to unwind positions, which means selling risk assets to repay yen denominated borrowing. So we will pay very close attention to this. Any extreme yen strength, yen interventions, or announcements from the Bank of Japan or Japanese finance ministers that cause any type of uncertainty around this current lingering possible risk off catalyst, we need to be mindful of in the coming weeks ahead. So to finish this off, before we head over into the technical analysis aspect, going over XRP, CANTON, and Solana's price action using our institutional Delta and Dark Pool information, the setup for this week is therefore fairly straightforward. The market recovered last week because hopes for Middle East diplomacy continued, labor data weakened, and Fed rate hike expectations came down. For that recovery to continue, investors now need inflation data to confirm that price pressures are easing and geopolitical developments to support lower oil prices rather than another energy shock and no fears or actual unwindings of yen carry trades. If CPI and PPI come in soft, Treasury yields continue falling, the dollar remains weak, and the Middle East moves closer towards a practical shipping agreement, risk assets could extend last week's recovery. If inflation comes in hot or Middle East tensions escalate again, the market could quickly give back some of those gains. For now, the biggest question is whether last week's weaker jobs report marks the beginning of a genuine shift towards easier financial conditions, or whether persistent inflation and geopolitical risk force the Fed to remain hawkish despite the slowdown in hiring. So now that you all are well aware of the current landscape, let's head over to the technical analysis breakdown. If you guys have been paying attention, we've been accurately tracking XRP, Canton coins price action, and we recently added Solana in a previous video breakdown. So we'll go over all of those dark pools and levels to be mindful of in the bullish and bearish scenarios ahead. So as of time of recording, XRP has sustained itself at the $0.03 threshold. Y'all, I'm telling you guys and gals, this level is so crazy to watch in real time as buyers have now defended against the sellers. And we have not yet seen if this is just sellers taking some profit before redistribution and a lower leg down comes into fruition, or whether buyers are absorbing sell volume and defending this previous monthly low in the base at around $0.03799. So in a bullish environment on the higher time frame this week on XRP's price, as long as, and you guys know my stance, we hold above that $0.03 last line in the sand, then we are expecting some higher prices and a much better recovery on XRP's price. Right now, the major hurdles still exist at the $1.16 to $1.29 threshold. The first sign of a much broader recovery would be, of course, a break above $1.09, turning that into support, which would coexist with a break above the 50 moving average. Then a next hurdle coming in at $1.16 or the monthly high from July. If we can turn that into support, that would open up the door for buyers to make an attempt at breaking all of the sell volume that exists where sellers trapped buyers at $1.29 and created this fresh leg to the downside. If we can create a new bullish leg above $1.29 on XRP, I'm going to start saying that the bottom is in. That's just me personally, but that would mean that we engulfed all of the sell volume that took us down to $1.03. Sellers were not able to break below $1, and buyers have rekindled all the losses from the last 2 months worth of bearish price action. So for me, $1.29, and I start to get extremely optimistic of higher levels on XRP. So these are the most immediate hurdles that we have to the upside this week in a bullish risk on environment. $1.09, turning that into support, $1.16, and $1.29 next. To the downside, of course, risks still remain. In a risk-off environment, if at any point in time sellers are able to close bearish beneath that $0.03799 threshold, which as of time of recording, you guys can see, has acted as a support, where sellers tried to make an attempt to bearishly close beneath that level, buyers were able to break back above $1.03, defend against the sellers here in this area, trap them, and have now pushed price back into the $0.04 threshold, hovering slightly above $1.03. If at any point in time we break and close bearish below $1.03, I'm still keeping those dollar cost average levels on my radar at around 91 cents. I personally will start to accumulate a very large bag of XRP in that scenario. Now, I have been dollar cost averaging into certain digital assets, including XRP, but I have not been putting substantial amounts in that I would at these lower levels. But I have been taking advantage of the discounted opportunities because greed works in both directions. When the market is declining in price, people always want lower prices. Sometimes that doesn't happen and you miss good entries. Same thing when the market's pumping, people always want higher prices and you miss profit taking. So I still have been taking advantage of these discounted prices. Now, as for Solana, in a recent update over on X, we mentioned to you all then, in order to see higher Solana prices, when we were hovering at the $74.38 dark pool, we had broken aggressively beneath this dark pool in previous days. Buyers then got trapped at the dark pool and sellers started to throw up a passive defense, and we created a new bearish leg underneath of the 74.38 level. Buyers came back up to test the strength of those sellers, and then we started to see buyers defending at the base from this push up higher, and they defended it very nicely, aggressively, and most recently broke above 74.38, retested that. You guys can see the accuracy of this retest right here, and have now started to trade bullishly above it. So with that being said, to the upside on Solana, the next institutional hurdle that we have on our radar comes in at the 80.14 psychological level. As long as buyers this week can hold price above 74.38 and start to make our way towards 80.14, 80.14 becomes our next institutional hurdle. Above 80.14, the next hurdle above is 85.11. So keep those two levels on your radar in the coming days ahead. To the downside, a break below 74.38, and we could still see buyers potentially defend this last bullish push. That, for me, comes in at around $72. As long as price on Solana is above $72, I'm expecting that $80 target to come to fruition next as the path of least resistance remains skewed to the upside. A break below $72 on Solana and a bearish close below the dark pool to 74.38 opens the door for a lower target on Solana, comes in at $69.72. Of course, downside risk still remains underneath of $69.72, opens the door for $63.60. However, right now, because of the market sentiment from last week, if that continues to carry on throughout the remainder of this week, I'm in favor of the $80 to $85 threshold coming into fruition. Canton, man, let me tell you what, people have been so scared of the drop in Canton's price. However, here at CYPRX, as you all know in previous video breakdowns, we were warning people that this was likely, very likely to happen. Over 4 to 5 months ago, when we were hovering in the 17-cent threshold up here at these highs, we had been telling people to pay attention to these lower level dark pools at the 0.9453 and the 0.7859 cent psychological level. As of time of recording, buyers have started to absorb some of the sell volume at the 0.9453. And if you all have been tracking our institutional delta and dark pool software, we have seen a buy delta held formation at the 0.9124 and the 0.8330 institutional delta. So showing you guys this delta held pattern in the lower time frames, you can see that we had sell volume come into both the delta and the dark pool. Buyers have since defended, breaking previous bearish structure over to the left-hand side, creating new bullish structure, where then sellers tried to make an attempt to defend against these buyers. They tried to make a new bearish leg to the downside. They failed. Buyers absorbed that sell volume and started to trap sellers, defending at their previous base, and have now broken back above the 50 moving average and started to create bullish price action, higher highs and higher lows, above the dark pool and the delta at the 0.9453. So as of time of recording, this is the most recent base on Canton's price action. So as long as we can hold above this base, even if we see price dip back down into it, buyers reaccumulate orders, there is a potential for another push back to the upside, with the next dark pool that we need to see buyers overcome coming in at the 12.257 cent psychological level. That would be bullish scenario number one. Bullish scenario number two is we do not get a deep retracement back down into the delta, and instead buyers hold above the 0.9453 cent psychological level and start to make the push higher. These will be the two bullish catalysts that I'm looking for this week on Canton. If we can break above the 12.257, I'll start to get excited, because that would mean an engulfment of all of this bearish price action where we had this drop down from dark pool to dark pool. So right now, 12.275 is the next hurdle to the upside. for buyers to overcome. Of course, to the downside on our radar, we are still keeping an eye on the 0.7859 psychological level, and underneath of that, 0.58 psychological level as our next DCA targets if sentiment worsens and a major risk-off catalyst. So hopefully you guys have enjoyed these accurate level-to-level updates on digital assets like XRP. We just recently added Solana and CANTON's price. We'll continue to give you guys these accurate updates. So I try to make videos for you all at least every other day or once every 3 days, giving you guys updates on price action publicly on YouTube. But if you guys want access to these levels, when they're changed, when they're updated, when they're broken, and when the deltas and the dark pools actually change, head over to CYPRXtrading.com. We'd love to have you on the team. Tap into the monthly Discord because you guys can have access to these levels on any currency pair or any asset class that you want. You guys can see the likes of XDC in here, XLM, Bitcoin, HBAR deltas and dark pools, Solana, Ondo, so on and so forth. If you guys trade forex, if you trade commodities, if you trade stocks, we can get you deltas and dark pools on all of those asset classes as well. Many blessings to you guys. Be cognizant, be aware out there. This is not financial advice. Remember, always do your own personal research. We know now what we need to see a risk on environment this upcoming week, and we also know what to be mindful of and to pay attention to in case of a risk off event. With that being said, I'll see you guys in the next video breakdown.